Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Tuesday, April the 2nd. The year's 2024. Let's talk trading. Trading with Walmal. These videos are for educational purposes only. Your results may differ from mine and differ from Walmal. And we are beginning a new month, but this is something we should remember every time we trade. Risk management. Never lose more than you're willing to lose on any one single trade. Walmal, we got another day where the not much range at this time.
Yep, we're sitting here with at least on with my broker that I'm looking at right now. Got a daily range of 37 pips. And it's like what I've been talking about the last couple times I've been on the phone with you, and just really muted markets, 35, 69, 36, 46. Although yesterday we were sitting here, I think we were about 40 pips when we were making the video, but it did surprise us and gave us 103 pips range for the day, and it was only because of one particular hour. And there was a news event, and I don't recall what the news event was, but it caused a major spike down, and gave us that. And it just shows you got to be ready, because you never know when the move's going to occur and how it's going to occur. And I think that's really talks more about, risk management than it talks about actually profits, because imagine if you were sitting there with a bunch of longs with no stops and no idea how you're going to get out if you're trading, if you're trading without a net, as they like to say. How are you going to get out, and you didn't have that. Well, you could find yourself sitting there with literally within an hour a 60 pip loss, because they were, that I think that 1 hour was like 50 or 60 pips.
Oh, let's see. Well, we've got the big drop looked like on my chart it was about 40 pips. Then the next hour continued down for about another 20 pips.
Yeah. Yeah. So that's a huge drop, man.
Yeah, let's see. We had a 42 and a 24 looking here at my at the chart showing the ranges. So, yeah, between those 2 hours, that was about 66 pips. But it's one of these things about the horizontal lines and the psychological levels. I mean, it hit that 00 and it just tanked.
Yeah. Yeah, it hit that 2600 and said, "Okay, we're not staying here, and we're done."
Yeah, and then it dropped all the way down. It hit I guess 25.39, and hit the and I like to call the 40s the launch pad, and it kept trying to launch out of there, and finally today it did. It launched all the way back up to the psychological 75. And what's kind of interesting is I believe I've got I got indicator 5 here, but it almost looks like the midpoint of that big candle, the price almost came back to the midpoint and then reversed.
Right. Yeah, it tends to do that. And I know I've talked about it ad nauseum, on this channel with you, and that's, when you get to midpoints, I don't care what it's a midpoint of, for whatever reason, it's got to be a psychological thing, but for whatever reason, when midpoints get hit, there's some thinking that takes place, and if it doesn't do any thinking and it goes through it, it usually gets all the way to the other end, and usually very, very quickly. Like, for instance, let's say you go and get a big, what we like to call return bar. Get a big return bar down, and then you get a candle that comes back into the return bar, and we usually say, okay, there's a good chance it's going to go back up to the open. Well, I like to go and trade it to the midpoint to that big return bar, and the reason why is because when it gets to that midpoint, more times than not, it'll sit there and stagger there a little bit, and sometimes it'll continue on to get to that open, and sometimes it just actually rejects off of that point. And it's so what do? I usually go and pay attention. If I'm making that type of a trade, I pay attention to what's happening. I mark out, literally draw a line on the chart at the midpoint, okay, and just put a horizontal line there. And that way, when the price gets there, I want to be right there in front of the machine watching it. And if I see it go blasting through it, sure, I'll go and run it all the way up. But more times than not, it doesn't. And if I see it going and staggering both sides of that line, or when I say that line, usually I go and draw not necessarily a line, but a zone, a pip or 2 or 3, and depending on how big that return bar is, I see it doing it. I start looking at that from a different perspective. And that different perspective is that my original reason for getting into the trade was to go and trade a return bar. Well, now we've gotten into the midpoint area. And because we've gotten into that midpoint area, and if it's just going back and forth, well, that trade is done. Now, it may get back up to the open. I mean, it may not. But why should I take a chance, where it goes all the way back to where my entry was? It's almost like a 50-50, shot. And it's sort of like, I've got money in the bank. Why am I giving away that money? Just go and take the money off the table, because I don't know what it's going to do. I'm no longer trading with statistics. I'm trading literally a 50-50 bet, and I call that gambling. And I'd rather just go, take my money off the table at that point and look for the next opportunity. Look for another reason to trade, as opposed to just hoping for the best. And I know you say this all the time, and that is that hope is not a trading plan. I don't need to hope for the price to go there. No, I want to go wait for the next opportunity to come along where I got statistics on my side again, and I'll just go and take it off. Now, if I make 5-6 pips right then and there, and it goes and I could have made another 5-6, yeah, okay, that's fine. You can't get upset about it. But then again, I could have also gone all the way back and gone back to my entry point and actually had to pay for the trade.
Yeah, that's something that I guess a lot of traders struggle with or fail to understand. I was talking with the trader on the phone, it was either last week or week before, and his equity trader. And I was, he's like, well, what method, what this? It's like, man, horizontal lines, that's all there is, in my plan, with the exception of indicator 2, which is just used pretty much for bias.
But and even indicator 2, you can use that as a horizontal. I know it's squiggly, but use it as a horizontal line, because what you do is you just go and use your point at the close of the previous candle.
Exactly.
And draw your line there.
Exactly.
So,
well, I put the dots or the diamonds on my chart. But the thing is, it's like I told him, I said, if you can swing 1,000 shares and you can make a dime, that's $100. I mean, and I said, if you have a daily goal of $500, I mean, you could do, one trade, if you make 50 cents on 1,000 shares, there's your $500. If you do 5 trades, and you make a dime, there's your $500. There's many ways to get to that 500, but it's like you get there and you quit. And I said, when you're in a trade, if it's moving slow and it hits where you're going, then you take it. But if it's chugging along and, next thing you're up a dime, you're up 11, you're up 12. Yeah, just let it keep going till it pretty much runs out of steam. And then you just take the money off the table and wait for the next opportunity. And when you look at the daily open line and how many times, price will crisscross it, you'll see you'll have a few opportunities, right near the open. And then if, you couple that with fading the gap, meaning if today's open is below yesterday's close, there's a high probability statistically that it's going to close that gap. and you just fade the gap when you get your signal, and you could be done in an hour or two. I mean, every day. That's when I used to trade equities. That's pretty much what I would do.
I'll talk about that for a second. The not necessarily the fading of the gap. I think we all understand that, but this idea of how do you actually implement that? Because it's the type of thing where do you just immediately go and take the trade, or do you have some type of methodology that puts you into the trade, aside from the idea of what you're looking to do? Because I look at fading the gap more as like, that's my bias for this moment in time, but what actually puts you into the trade?
Oh, well, I put the pound. I'm using the M30 chart here, and I've got the daily open. To me, it's just simple. It's candle color at the line. Nothing more, nothing less. And so either I'll trade the open line, or I will wait till it gets to what I call the buy zone, which is between 8 and 10 pips from the daily open. But I'll have to put a little asterisk on that. I haven't run the statistics lately on the pound, so the buy zone might be a little bit tighter than that, just because the range is so much smaller. But the point being is that once you have those lines set, it's pretty much candle color at the line. So you can see price came down, didn't quite bust through the or get out of the, get below the short zone. So when it comes back to the open, it's just like, well, how about I go ahead and just, I could put either the whole trade on or the whole position on, or put a partial position on right there at the open, and then see what happens when it runs to the actual buy zone. So the only trigger is candle color. I mean, it's just real simple, because at the end of the day, when you look at high minus open and open minus low, like we usually do, you can see that there's opportunity to take profit, and that's all I'm looking for. Give me an opportunity to take profit.
Right. I agree with you 100%. But I think you essentially what you're saying, is because you're just trading the candle color, you're keeping it simple. And I think that what we sometimes do as traders, we wind up putting all types of craziness on top of things. We have a great idea, about how we can go and take advantage of the market. And then what we do is we complicate the crap out of it, and the next thing you know, we've either created something that we can't actually go and do because it's so complicated. And by the time we figure it out, the opportunity has gone away, or worse, or just as bad, not worse, but just as bad as that, is what happens is we wind up actually going and taking our bias and actually going in and ruining our bias, because now what happens is we have a bias in this direction, a bias in that direction, and a bias in, in a third direction, which is not possible, and so because of that, and because of that, what happens is we can't take the trade because we're stymied,
Yeah, and the other thing is that you take something as simple as the method I just described, the buy zone. What'll happen is you'll then want to put something else, add something to it. Why? Because you want to eliminate the losers. Well, right there, that's your mistake. Because
right.
What'll happen is you will not only you might eliminate a loser, but you might eliminate some winners. And so why not just take something that statistically puts things in your favor, kind of like the casino, and then just do it. But the biggest thing is knowing when to quit for the day. And it's like, if you have a goal, and if you get there easy, that's one thing. But if you got there, it was really difficult, that's the time to get out. And the fastest 15 minutes in trading is almost over. So we'll probably continue this discussion. So fellow traders, always remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.